Hello and welcome back here to a new video, and today we will talk about a very interesting topic, and I will share a few price action principles, price action trading tips and tricks that you can use in your own trading to make everything more simple, to analyze the charts in a better way, because we all know having a simple approach is usually much better in trading than making it too complicated. Just focus on what is really important on the charts, and I will show you on a few examples how to do that. So the first tip, when you analyze a price action chart and you want to just focus on the basics, then look at trend and wave structure, and let's go over to some charts and see what that means. So classic Dow theory, if you are not aware, means that an uptrend is existent if price is making higher highs and higher lows. So this we can see very nicely here on the right hand side. Price was making higher highs and higher lows here all the way throughout this uptrend. I can show that what this means. So here's the ultimate low. Then we broke our first or the previous swing high here. So now we are in an uptrend. We're making a higher high here. We are now making also, when we look at this area, higher lows, a higher high. Then here we have a higher low, a higher high again, a higher high, a higher low here at the bottom, the last swing high, and then we break here this trend structure when we violate this previous swing low. So at this point we are changing again now to a downtrend, and you can see here we have been moving lower since. So the first thing, if you are a trend following trader, you want to look at such trend structures, higher highs and higher lows. Then you can use moving averages or other things to buy the dips here. In such a case, you can see here very often the swing lows and the pullbacks, they find an end here at the moving average here, and this can be quite an interesting trading strategy. If you're a reversal trader like I am, then you look at those broken areas here where the price goes from downtrend to an uptrend, and then we look for specific ways to analyze those trend and wave structures. So this is a very good way of understanding any market, and also when you are in a range market, you can see that quite easily as well, just by looking at highs and lows. When price goes sideways, then you can usually find that or identify that very easily as well. The next thing that is very important in trading, not only in price action trading but in any trading, is momentum. And when I mean momentum, then I mean the trend strength or the price strength in general. So how strong is the price pushing in one direction? Are the candles large? Are the candles small? Do we have small wicks or long wicks? Long candle wicks usually show rejection or more volatility, whereas long candles with small wicks show that the momentum is very high. And in a high momentum market, the price action is usually much more likely to continue, as we will see now. So you can see, again, let's just come back to this example because it's quite nice. It's also a recent chart, so it makes sense. You can see here during this uptrend, the momentum to the upside is much higher. So let me show you what this means. So the uptrend candles, or the bullish candles in this case, they are much stronger. You can see here this sequence of long bullish candles, much stronger than what we have seen here during this corrective wave. Also here a small sideways consolidation, not very strong. We barely have any bearish candles, and then here followed again the momentum to the upside. It's much stronger. You can see two very strong candles, long bodies, relatively small wicks. Here we then see the first real pullback, but you can see where do we find support? Right at the 20-period moving average, and then afterwards, boom, we have the next candle, which is very strong, a high momentum candle, the bullish one. You can see it completely engulfs the first, or it completely engulfs the previous three candles. You can see 1, 2, 3. They all fall completely into the range of this bullish candle, which shows us high momentum. And again here, no real bearish momentum, just small candles, and then again high momentum bars to the upside. So this all shows that the uptrend is well intact. The uptrend is here very strong. The buyers are in complete control. The sellers barely can move the price any lower, and the momentum to the upside is much stronger. Whereas then here you can see the first indication, a major bearish candle here. The momentum seems to be shifting. As I said in the previous step, with a trend structure. You can see here we are changing the trend structure, and we have now here also a high momentum bar. So again, if you are a trend trader, let me get rid of this, then look for those momentum candles into the direction of the trend, because they confirm that the trend is on its way. The trend to the upside here is the main theme here, and the bears are not in control. Price barriers is the next topic, and here I mean that we look for natural support and resistance. We look for price barriers such as supply and demand, and this just means that we look for very likely areas on the price charts where the price might have struggles breaking them. So, and they can come in many different shapes and forms. Usually when I draw support and resistance, I don't like to use just thin lines, because price is a very dynamic thing, and just using thin lines is just not going to cut it. So I usually prefer to use support and resistance zones. So here we have a very strong support zone. You can see the first time, the second time, this is even then a trap, the third time, fourth time, and then here we finally break it with strong momentum, and then we move up, and then we move lower here. We even come back to retest this level. So price barriers are very important. So you can see here with a retest, you could have even gotten into another trade. Then other price barriers can be trend lines, such as here. You can probably even extend that a little bit back, and then you get a different type of trend line. So trend lines are also very important to have support and resistance, and supply and demand. So we can look for supply and demand areas as well. Let me just go through this chart, and you can see here in this area, very interesting, we can even extend that back. Here is a little demand area where this uptrend has started. So if you have not seen the video, supply and demand areas are areas with small consolidations that then started as a significant, strong, and mostly an explosive and strong trend. So here you can see small consolidation before price then shoots up higher and starts this uptrend. So this can be classified as a demand area, and when we just look forward, you can see the demand area acted then as support. Very interesting. And here again a few very interesting support areas here. So swing lows usually make for very good support and resistance areas, and this is also a very interesting formation here. To the upside we have a support and resistance, what I call a flip zone. Why a flip zone? Because the area flips. So first this area is resistance, then here we break it, it comes back and retests it as support. We break it here on the way down, the price comes back here to retest it, now it's becoming resistance again, and so on and so forth. So support and resistance also very interesting, and again you can see here that I use zones instead of single lines, because usually they carry much more weight. Then the fourth principle and the second last one is called classic structures and patterns, and this means that in my own trading I look for things like the very classic price action structures, such as head and shoulders. I look for consolidations after trending periods, trend lines, wedges, triangles, and all that stuff. So here, for example, we can see a very nice, it's not a classic head and shoulders, but let's just see what price tells us here. So we were in an uptrend here, clearly price was moving higher here. Then here on the left side we had an area of previous swing highs. Then here we have the ultimate swing high, the market top, and then price breaks lower here on the right side. So we can call that a head and shoulders. It's not a textbook one, but I always think that it's better to learn how to trade with non-textbook patterns, because textbook patterns, they rarely exist, and if you are just waiting for a textbook pattern, then usually you are screwed, because they never really work out, because once it's a textbook pattern, everybody will be aware of them. And then we have other patterns here. Probably we can see here something like a wedge here, or more or less just a contracting range market. We can even draw it like this, and then you can see here we do have something like a triangle. If we draw it like this, you can see the highs are coming lower, the lows are coming higher, price is then contracting here. We just wait for the breakout and then off we go. And those are very classic patterns. They show you a lot about, or they help you understand price action in a good way. You just have to wait for breakouts, which is the hardest part, not getting into trades too early. When you just anticipate here, or here for example, this head and shoulders, you think, okay, price will go down, and then you short it too early, but then here what happens, you run into those support bounces where price goes against you again and you get taken out. So always wait for a breakout, and then you are usually on the safer side. And then here the final and the fifth principle of basic price action, and keeping it very simple, is rejection versus follow through. And let's just get onto a chart and see what this really means. So rejections should be very obvious. Rejections are shown by very long candle wicks usually, and immediate turnaround. So you can see we did have some type of double bottom here, a very nice support area, then price spikes into this area, we leave a very, very strong wick, we immediately turn around into the next two candles, and then we start here this uptrend. So rejections are very, very obvious. You can use Bollinger Band spikes, which is a pattern that I trade in my own trading. So there's a link in the description below if you want to learn how to trade my trading system, which contains of a few different setups and signals, and just check the link in the description below. Then here was a trade from last week, which a lot of our students took, a different type of rejection. You can see price shoots lower. We leave a wick here into a very interesting area, and then we shoot higher. So rejections are usually very obvious, and if they're not obvious, you should not trade them. So that's also a good rule of thumb, where you just wait for very obvious and very good signals. They don't have to be textbook ones, but they have to really jump at you without you having to think and ponder too long about a signal. Here again, very classic rejection signal. We have this support area here in this area, a lot of wicks. Then we come down, we reject it obviously very, very strong. We turn around immediately, and in the next candle we already start the uptrend, and then you can see here a few hundred pips to the upside. Very interesting level. So rejections are a very interesting one, especially when they fall into confluence areas. So, and that's it. I think this gives you a good idea of what to look for in a chart. We can repeat it one more time. Trend and wave structure. Look for the classic Dow theory, where it is confirmed and where it's broken. When trends make higher highs and higher lows, or in the case of a downtrend, lower lows and lower highs. Very, very important. Then momentum, is price moving strong or is price moving weak? Do we have a lot of opposition? In which direction are the traders pushing the market? Where are the strong buyers or sellers, and where are the weak hands? Then look for price barriers such as support and resistance. Look where price breaks them and flips. Look for supply and demand and other things. Then classic structures and patterns. They also play a very big role in my own trading. So if you want to learn more about them, check out my pro course, the premium courses, link in the description below. Mainly look for head and shoulders, look for consolidations, triangles, wedges, and then try to focus on learning how they work. And then finally, rejections versus follow through. So look for rejections at important market areas, and then this will also be a very big help in your own trading. I hope you enjoyed this video. If you have any questions, of course, let me know in the comments below, and I am very happy to help out.